We've had a mixed read on the PMI data over the last few sessions. Is this a bit of a prelude in terms of the data to come, in terms of whether it's a blip or indicative of some concerning trends? And could that reignite some of the calls for stimulus, do you think?
Well, the calls for stimulus are never going to stop. Everyone's hoping for that bazooka that will satiate global investors and make them feel that the Chinese government is really serious about stimulating particular consumer demand and consumer confidence in the market. But the reality is that the PMI numbers weren't too bad. They increased about 0.3. And I think it shows that the stimulus measures, in particular the trade-in policy, are working, and demand actually is increasing again. So I actually think the picture is better than you think. And better than the numbers belie, because there's so much deflation in China. It's actually so cheap to consume that the numbers don't show up the amount of consumption that's truly going on.
Okay, we've got the trade numbers out this Friday, and I suppose the big question on everyone's mind is the export growth, or at least the recovery driven by those outbound shipments, sustainable? I suppose the big question also within that is whether we're actually going to see some front loading because of those US tariffs. But so far, if you look at the PMI data, it doesn't look like from the export gauge that we're seeing within those surveys that exports are likely to perform particularly well. So where does the growth come from if we're continuing to see softness in this space?
We certainly can't rely on outbound export growth to continue to stimulate the Chinese economy. It's really got to be domestic driven. And again, as it feels now today like the economy has a bottom under it, we're seeing really nice, at least steady performance in the public markets. That will increase the folks' confidence in the overall market. And they'll start to dip into that massive $7-8 trillion of savings that they're sitting on. And that's where the growth is going to have to come from. We can't rely on export and other markets to buy it, because everyone is struggling economically across the world today.
Ben, you're expecting further recovery in the residential real estate part of China. So I guess two-layer question. One, is the worst over, at least when it comes to Tier 1 cities? And is there any particular stocks that you like in this space?
We generally stay away from the real estate space. And I think you'll continue to see various forms of bailout, bond, coupon misses, and other things that will pop up across the board. So I'm certainly not one to recommend an investment into the space. But I do think that, again, we've certainly passed a lot of the worst. For years, we've been hearing that it's going to be another Lehman moment, and that seems to never occur. And there are so many tools in the arsenal of the Chinese regulators to pour into improving that consumption picture. Again, we've got over 200 million folks that still need to come to Tier 1 cities and buy homes. The hukou system needs to be reorganized so that people that already live in Tier 1 cities can legally buy homes, and that's about 7% of those residents across the board. So there are a lot of measures still to be put into place to enable people to buy, rather than forcing existing Tier 1 city investors or residents to just buy more properties, which I think they're unlikely to do.